Hello, my name is Blockchain Noob, and today I would like to share with you the fresh news from the blockchain industry. All the content I will talk about is from Blockchain Weekly newsletter. It's a weekly newsletter. If you subscribe to it over there, then every Friday morning you will receive on your mailbox the fresh news from the industry and also quite deep articles about current states of the blockchain, about the challenges and about the directions that we should go. And also there is a section for newbies. If you are new in cryptocurrencies or you are just a trader and you don't have basic knowledge about what is the blockchain, how it works, what's the difference between Ethereum, Neo, and BitShares, for example, then this section is for you, is for beginners. So let's start about the fresh things in this week. So of course there will be big collapse on the market. At some point the entire crypto market lost almost half of the value. But of course it doesn't matter in the long run. We'll not focus on the reason of that because it's just a trading, it's just a trading market. We'll focus on the technology, and there are three important news from this week. First of all, Vitalik the founder of Ethereum, decided to leave a venture capital firm. He was the main advisor of the China-based venture capital, one of the biggest one, and it was called Fenbushi Capital. And he decided to leave. He was the main advisor in this fund because he wanted to focus more on the technology and on the challenges that Ethereum will struggle in the future, like of course the scalability issue. So I think it's a good move from Vitalik. I think there's like a big problem that the people from the Ethereum Foundation, the founders, they're advisors in many projects. Sometimes they just show the face of they sell the face, and I think they should focus mostly on their own projects, not advise others because they don't have time for that. And if they don't advise them, just only sell their face, they should stop to be transparent. The next big news is about Telegram. As you probably know, Telegram is a group chat app, and it is in use in mostly blockchain projects. The projects create their public groups to communicate with audience, with investors, with potential users, and so on. And Telegram plans to do $1,200,000,000 ICO to create, they say, next Ethereum. And the question is if we need the next Ethereum or we already have quite good proposals for next Ethereum, like Neo, like Quantum, like EOS, like Lisk, like Cardano. So we have many projects that have big technology background in the blockchain industry, and then Telegram want to create something new. And the question is if they really need this kind of money and if they will be able to handle that. The other thing is that there is a London Blockchain Week. This week start on 19 January to 26th. It is quite a good place. If you are from Europe, then you should get plane to London and spend this week there. There are a lot of blockchain events there. If you need more details, just go to our newsletter, blockchainweekly.net, and check it out. There is also a feed section where there are not fresh news, sorry for my English. There are like articles that people share their opinion about the ecosystem, about the future, about the challenges. And one of the best from last week is the explanation of the concept of decentralized autonomous initial coin offerings. So it is like merging connection between DAOs, like decentralized autonomous organizations, and ICOs, initial call offerings. There are a lot of problems with ICOs. One of the biggest is that the team receives all the money at the beginning, so they are funded by sometimes hundreds of $1,000,000 when they are still at the early stage of development, and they already get all this money. So they have no external motivation, no financial motivation to continue the work, to do their best, and to deliver. So the idea is that the ICO smart contract will be not only responsible for distribution of the token, but also to keep the money in the contract and allow team to use funds only when investors will agree on that. So, for example, projects earn $100 million, and investors can vote by the tokens that the project is able to receive only $1 million per month, let's say, for development, for marketing, and so on. And there can also be milestones proposed by the projects, and they have to deliver the milestones. If not, the amount of money can be smaller, decreased, or of course there can be some conditions where the amount will increase. So it will give control to the people, the investors. It's not like you give your money and they can do anything with that. So I think this is quite a good direction. And when I read about this, I felt like, really, it's so simple concept, we should already have that. And another interesting article is about challenging of building Ethereum infrastructure, and it is from the guy from BitGo projects when they are working on the low-level infrastructure. A lot of technical issues, challenges. If you are a technical person, you should for sure read that. And also, if you are not, you just take a look at this to see at how early stage we still are and how all this technology is complicated and still in development, still in research sometimes. There are also two other technical articles. One is the explanation of the plasma chain on the Ethereum blockchain. It is written by people for Omnizago project. And also there's an article about smart contract security for developers, how to avoid potential security issues in a smart contract. If we remember the DAO hack and the parity hacks in last summer, then we can see sometimes the simple design mistakes can make a big problem with thousands of millions of dollars just disappear or are hacked. So if you're a developer, you should read this for sure. And at the end, there is a section for newbies. If you are new into blockchain, there are some articles for you. I think the most important one is about miners. The title is "Miners Aren't Your Friends." It means that the economic incentive of miners and the users of the network is opposite. And it's not only about the transaction fee. The users want the lowest one and the miners wants the highest one. Because the manipulation of the transaction fee is the simplest and maybe most innocent thing the miners can trick you. They can do some more ugly manipulating stuff. If you want to know more about this, just read this article. And there's also quite interesting essay, let's say. It's called "Everyone is Getting Hilarious Rich and You Are Not." And it's about the crypto anarchists that are into cryptocurrency, the blockchain for many years, and now they are so fucking rich. And you can take a look how they are live right now. Quite interesting article to read. And there's also one article about how one confirmation is evaluating new tokens value. So how they make decision if they would like to invest in the token in the long term. If you are not daily trader, if you're investing in the long run, I think this is the one you really should read. And finally, the last but not least, it's called What is EOS blockchain? It is simple explanation of the EOS blockchain, how it will work and how it can change the ecosystem, how it can enable us to create really scalable blockchain applications. In my personal point of view, EOS is one of the most promising coin and platform for this year, so I would recommend you to read about this. Basically, this is the content that we provide to you this week. All of it is online on blockchainweekly.net, and I recommend you to subscribe to this newsletter. The link, of course, is below. So thank you for your time, and wish you a nice weekend, and see you next week.